Hello guys, so this is a discussion of the answers for the exercises I gave you in the past few weeks. So let's start with corporations. The first question is, in 2018, a domestic corporation declared and paid dividends to its shareholders as follows. So meron siyang iba't ibang recipient ng dividends, and the question is how much is the final tax rate held by the corporation. So binigay ko 'tong problem na 'to kasi medyo iba-iba yung rules sa dividends, 'di ba? And for you to just assess na dapat hindi na kayo nalilito pagdating sa dividend. So, ito yung correct treatments for each. Siyempre sa resident citizen, NRC, and RA, pare-pareho lang ang 10%. And then for NRA-FB, 20%. And then NRA-NET-B is 25%. Then domestic corporation to domestic and domestic to resident foreign or intercorporate dividends, so they're both exempt. And then sa NRFC, 15% because again, we assume reciprocity or tax-paying rule, kaya 15%. So, pag minultiply nyo sa tamang tax rates, this will be the result, and then the total would be 230,000. So, wala naman kayong na-raise na questions dito. I think most of you, if not all, got this correctly. Second question, Hana Corporation has the following data for the current year. So, meron siyang gross income and expenses within, and then gross income and expenses without, and then is final passive income. And the question is how much is the income tax due if the corporation is a domestic corporation, resident foreign, or non-resident foreign corporation. So, pag domestic, kasama syempre lahat. And of course, yung interest on bank deposit will not form part of the taxable income kasi siya ay subject to final income tax. So, adding it all together, the taxable income will be 355,000 times 30% tax rate. The answer is 106,500. For RFC, income within lang siya tinataksan. So, ignore lang natin yung gross income and expenses from Singapore. And then, interest on bank deposit is subject to final income tax as well. So, adding 850 plus 615 is 235 times 30% tax rate. So, the answer is 70,500. And lastly, for NRFC, they're not allowed to have deductions, kaya gross income lang yung nandyan. Tapos, yan, walang any expenses, and hindi rin kasama yung sa Singapore because NRFCs are taxed from under income din. Tapos, kasama na interest on bank deposit because all income naman ng NRFC ay subject to final income tax. So, we don't make any distinctions anymore, unlike sa domestic and sa resident foreign corporation. So, that's 925 times 30%, kaya 277,500. Third question, a domestic corporation established 2001 had the following results in 2018 and 2019. How much is the income tax payable in 2019? So, the first thing to do is, of course, find the taxable income. So, for 2018, that's negative 25,000. And for 2019, this will form part of allowable deductions kasi may NOLCO. Kaya for 2019, 370,000 yung magiging taxable income. And then, of course, we compare RSIT and MSIT. So, for 2018, zero siya for RSIT, and then MSIT is 13,000. That's sales na 1.7 million less 1,050,000 times 2%. Okay, so yun yung 13,000. And then, for 2019, yung 370 times 0.3 is 111,000. And then yung MSIT is only 17.5. So, for 2018, The tax due is 13,000 kasi ito yung mas malaki. And then, for 2019, RSIT na yung due, that's 111, less 13,000 na excess MSIT nung 2018. Kaya, 98,000 yung sagot natin for 2019. Next question, a domestic corporation has the following information in 2019. And then, meron siyang per quarter na RSIT, MSIT, and CWT. Additional information, MSIT carryover from prior year is 50,000 and excess tax credit from prior year is 30,000. So determine the income tax for the 3 quarters and for the whole year. So, ito yung gagawin natin or dapat na ginawa nyo. So, for quarter 1, we just compare which is ano yung mas malaki, kung RSIT ba or MSIT by computing for the cumulative taxes every quarter. So, for quarter 1, that's simply 240 versus 210,000. So, mas malaki yung 240. Then, i-deduct natin yung creditable withholding tax na given. And then, tax credit from prior year. Lagi yung i-deduct. And then, tax credit prior quarter. So, yan yung mga tax payments natin. So, Q1, wala pa. And then, excess MSIT. Diba kapag RSIT yung due, ibabawas natin yung excess. So, for quarter 1, that's 240 less 40 less 30 less 50, 120,000. And then, for second quarter, same formula naman. But for RSIT, total niya na is 440,000. But the MSIT due is 770,000. So, dun tayo sa mas malaki, 770,000. Less creditable withholding tax na 40,000 plus 60,000 for the first 2 quarters. And then yung tax credit prior year, again, 30,000. And then yung tax credit prior quarter, yung binayaran natin last quarter is 120,000. So, since dito, MSIT yung due, hindi natin i-deduct yung excess MSIT. Okay? Then for third quarter, same process. You will see that RSIT is due. That's 940 versus 910,000. Tapos, again, add nyo lang yung total creditable withholding taxes, tax credit from prior year, and yung for yung tax payments in the prior quarter. So that's 120 plus 520, so less 640. Tapos, since RSIT na ulit yung due, we will deduct the excess MSIT from last year. So, the tax due, the tax payable for the third quarter is 40,000. Then, for annual, ito total lang natin lahat. Yeah, ito total lang natin lahat. So, that's 1,240 versus 1,010,000 MSIT. So, our SIT will be due. So, that's 1,240. And then, the total creditable withholding taxes for the whole year is 250,000. Less the tax credit prior year of 30,000. Less total tax payments. So, that's 120 plus 520 plus 40. That's 680,000. And since our SIT yung due, ililess lang natin ulit yung excess MCIT from last year na 50,000. So, for the whole year, the tax payable is 230,000. Last question for corporation. ABC Corporation, a domestic corporation, had the following in 2019. Compute for the income tax payable and the IAE. So, normal computation lang din. The first thing to do is, of course, determine yung treatment for each item. So, ayan, ganyan ko siya nilabel. So, plus mo yung 5 million, less 2 million COGS, less 500,000 administrative expenses. Then, interest income from bank deposits, ay hindi kasama because it's subject to final tax. Rent income kasama, but we have to divide it by 0.95 since this is already net of 5% withholding tax. Yun. Tapos, dividend income from DC is exempt. Dividend income from foreign, so part of gross income. And then CG from sale of domestic shares directly to the buyer, that's subject to capital gains tax. And then, wala na tayong gagawin sa dividend paid, par value, retained earnings, and appropriation for plant expansion. Mamaya pa siya relevant sa pag-compute ng AIF. So, pag sinunod nyo to, the taxable income will be 2,750,000. And then, times 30%, the tax due is 825,000. Less the creditable withholding tax of 10,000, dun yun sa rental income na nakanet na. So, the tax payable is 815. Ayun. So, watch out sa mga may withholding taxes. So, huwag nyo sila kalimutan ilagay sa i-less sa tax due. For IAET naman, let's start with the taxable income of 2,750,000. Then, sa pagka-label natin kanina, yung exempt income natin is yung dividend income from a domestic corporation. Then, income subject to final tax, yung sa bank deposit. And then, subject to CGT, yung pag-sale ng share of stocks directly to the buyer. And then, less tax due. Tapos, yung final tax and yung capital gains tax. Tapos, sinama ko na rin dyan yung dividend paid. Then, we add the beginning retained earnings. So, the total is 2,628,750. Then, ililess natin yung 100% ng par value. And we can further deduct yung mga reasonable needs ng business. So, yung appropriation for plant expansion, we can deduct that. So, the improperly accumulated taxable income is 1,228,750. So, the IAET is just multiplied by 10%. So, 132,875. So, I think mali yung nabigay kong answer ki dito nung nakaraan. This is from the Tabag reviewer actually. And yung ginamit niyang rate is yung lumang rate on capital gains tax. So, I apologize for that. Pero this is the correct answer. Next naman, income tax on partnerships. I think merong 4 na questions dito. So, let's start. A partnership with A and B as partners, both resident citizens and sharing profit and loss equally, had a net professional income amounting to 500,000 for 2018. Other income included bank interest, net of withholding tax, royalty income, net of final withholding tax. A has his own separate eatery business. In 2018, his business had net sales of 1 million, cost of sales of 500,000, and operating expenses of 300,000. The net share of A in the income of the GPP is, so I think merong several corrections for this entire problem. Kasi, unting disclosure lang, no? This is from my CPAR handouts ng partnerships. Okay, so, yung binigay kong answers sa inyo, yun yung answers sa handouts. Multiple choices yun, by the way. So, I think, kung multiple choice, and dun yung mga, kung nakita nyo yung choices, yun rin yung pipiliin yung sagot. But then, someone raised questions on this, and I think, tama naman siya. So, tinry ko siya isolve ulit. And, ito I think, yung tamang answers, no? So, measure of A is regular income ni partnership. Tapos, kasi since GPP naman din na natin kailangan taksan. And then, interest income is net. final withholding tax, royalty income is also net of final withholding tax. So that's 518,000. Tapos equal P&L sharing naman. So times 50% lang. That's 259,000. So yung binigay ko sa inyo na 233,100, ang ginawa doon, yung 259 times 90% pa. So nag-withhold siya ng 10%. I think the basis of that is yung pag-share ni partner ay 720,000 or less, mag-withhold ka ng 10%. So, however, that is not correct because yung isa-subject mo lang dapat sa creditable withholding tax ay yung regular income because yung final withholding taxes nga ay hindi naman creditable. Okay? So, ayan. Yun yung mali doon. Tapos, I checked if pag sinabi bang net share, it should be net of creditable withholding tax. So, based sa mga na-encounter kong problems, hindi pa siya ninenet ng creditable withholding tax. Okay? So, parang hindi natin siya ina-assume. But, of course, like what I said sa mga nauna nang nagtanong, the best thing to do is to check the choices kung lalabas ba kung ano yung lalabas. Kung nag-withhold ba ng 10% or 15% or hindi. Ayun. Ayun. So, I hope that clears many things sa inyo. The income tax payable of A is, of course, yung sarili niyang income. That's 1 million less 500 less 300. And then yung share niya sa GPP. So, kung makikita niyo dito, syempre hindi na magpo-form part yung sinubject na sa final withholding tax. So, ang share in GPP niya lang nalalabas is yung 500,000 divided by 2 or times 50%. So, the taxable income is for 50,000 and then the tax due and payable using the get-weighted tax rate is 42,500. So, yung binigay kong answer sa inyo, I think that's 16,600. Ganun rin yung ginawa niya. So, ang ginawa dun sa handout again is taxable income na 450. Ginamitan niya ng tax table and then nag-less siya ng creditable withholding tax na 25,900. So, ayun. I think that's also wrong. Kasi nga, dapat yung creditable withholding tax is only based on the regular income. Next question, using the same problem but assume that AB partnership is a commercial partnership. The taxable income of the partnership is yun, 500,000 lang kasi yan naman na yung net income na given. And yung final passive income will be subject to final income tax. Using the preceding number, the net distributable share of B is, so, kung taxable partnership na to, so, yung 500,000 less 30% tax, the regular income will now be 350,000. And then, again, yung other income niya, net of final withholding taxes na, the total distributable income is 368,000 times 50%, that's 184,000. So, I think mali ulit yung nasa answer key na binigay ko. Actually, itong 184,000 wala to sa choices nung handouts. So, yung 184 is ninet niya rin na 10% creditable withholding tax. So, ayun, kung in that case, I think I admire you guys no na kinwestiyon nyo yan, but things are different when it comes to multiple choice problems. Hindi po siya laging may tamang sagot, and that's the truth about the board exam. So, what you have to do is find the best answer. So, like what I always emphasize sa inyo, lagi kayong mag-work back, okay? I-trace back nyo kung ba't nandun yung choice na yon. Okay? And then, hindi ko sinasabi na lagi nyo lang i-work back from the choices and kung ano yung magmamatch. So, you can solve it first. You can solve the problem first on your own. Then, pag lumabas sa choices, edi you can mark it na, 'di ba? Pero, it's always safe to try to work back na itong choice na to, saan ba to nagli-lead? Okay? Kasi, minsan, hindi tama yung mga nasa choices. And what you have to do is choose the best or most reasonable answer. Okay? Ganun rin sa theories part. Ayun lang. So next problem, A and B are partners in a GPP which realized a gross income of 800,000 with a corresponding 350,000 in expenses in the year 2018. A has its own business generating net sales of 400,000 and incurring costs of sales and deductible expenses of 30,000 and 230,000 respectively. B also has its own business generating 450,000 in net sales and incurring costs of sales and deductible expenses of 200,000 and 50,000 respectively. They share profits and losses of their partnership at 4:6. So the taxable income of A who avails of the OSD is, ang rule lang naman dito, ang di nyo dapat makalimutan is that the share in GPP should not be part of yung basis ng 40% OSD. So that's sales, yun lang yung magiging base ng 40%. So pag individual, no, just the gross sales or receipts, and then pag corporation, OSD, gross income yung base. So I hope that you remember that as well. So dito sales lang, less 40% OSD, and then saka natin i-add yung share in GPP na 450 times 40%. So that's 800,000 less 350,000. Tapos times 40% na profit sharing for A. Okay, so the taxable income is 420,000. So next question, the taxable income of B who uses itemized deductions. So very basic naman. So that's just the normal computation. So sales of 450 less cost of sales na 200 less expenses na 50 and then share income, share in GPP that's 450 times 60% naman. Taxable income is 470,000. And lastly, if the partnership is an ordinary partnership, its tax due is normal computation as well, and then times 30% lang. So that's 800 less 350, 450 times 30%. A company and B company, domestic corporations, both engaged in the transportation business with operations in North and Central Luzon, formed a joint venture agreeing to distribute the net income of the joint venture equally. In a taxable year, the joint venture had a gross income of 5 million and expense of 3.5 million. Determine the income tax liability of the joint venture. The share of a company in the distributable net income of the joint venture, and the final tax on the share of A. So, the income tax liability of the joint venture, since transportation business, this is not an exempt joint venture, so we have to compute the tax. That's just 5 million gross income less 3.5 million expenses. The taxable income is 1.5 million times 30%. The tax due is 450,000. The share of a company is just the distributable income of the partnership, which is just the taxable income net of the net income after tax. Basically, that's 1,050,000 times 50% or divided by 2. That's 525,000. And lastly, the final tax on the share of a company is of course none because this appears to be a intercorporate dividend. So that's uh, um it's like a dividend income from a domestic corporation, kaya exempt siya. I think this is the last question for partnerships. A company and B company are contractors. A joint venture was entered into to construct a new expressway north and south of Manila and collect toll from users. Data on the joint venture and ventures are as follows. Determine the income tax payable of the joint venture, the income tax payable of A, and the income tax payable of B. So since this is a construction project, this is an exempt joint venture. So the income tax payable is zero or none because this is an exempt JV. The income tax payable of A is basically just getting the regular income and then adding um, the share in the income of the joint venture. That's just the gross income of 5 million less 3 million expenses. Then we add the share in joint venture's income, which is 6 million divided by 2, 3 million, and the taxable income is 5 million times 30%. The tax due is 1.5 million less the quarterly tax payments, 500,000. So the tax payable is 1 million. And for B naman, ganun lang rin. Same process lang, different amounts. So, marami nagtanong dito kung bakit hindi net of creditable withholding tax yung tax payable. So, number one, katulad ng sinabi ko kanina, usually, hindi talaga siya ina-assume yung creditable withholding tax. I don't know the logic behind this. It's just based on my personal experience as well sa pag-answer ko ng handouts. Most of the time, hindi net off creditable withholding tax yung distribution of income to the partners. Second, I'm not sure about this, but I think that sa case na to, hindi talaga siya winithholdan ng tax because the distribution are not to individuals, to company siya, A company and B company. Remember that the withholding tax, you have to know that the nature of the withholding tax is a withholding tax on the share of the partners of a GPP. Okay, so yung 10 and 15% withholding tax on professional fees siya, basically. Kasi since ang tatanggap ay partners ng isang GPP, so they are professionals and yung binibigay ay parang professional fee. So that's why magwi-withhold ng 10 or 15%. However, in this case, joint venture, hindi siya GPP. So I think hindi applicable dito yung 10 and 15% withholding tax. So I think that's something you have to validate then. Excuse me. Something that you have to validate then as you go along and as you encounter more problems. Ayun, I hope that clears most of the questions in your mind, especially sa partnerships. Ayun. And lastly, sa income taxation for estates and trusts, meron lang tayong, I think, 2 problems. First, A died on January 2, leaving a net estate of 4 million. The estate is in the hands of an executor, and B, a nephew of A, is one of the heirs. In 2019, the estate had a gross income of 800,000 and expenses of 500,000 on the properties of the estate. B has his own gross sales of 600,000, cost of sales of 400,000, and business expenses of 120,000. The executor distributed to B the following: from the properties in the estate, 250,000; from the current year's income, net of 15% creditable withholding tax, 85,000. So determine the taxable income of the estate in 2019. So, di ba, ang estate para individual lang naman. So, that's just gross income of 800 less expenses of 500,000, and then part ng deduction is yung income distributed to heirs. Of course, gross of withholding dapat. So that's 800 less 500 less 100. The taxable income for 2019 is 200,000. And then for B, kung ano yung sinubtract mo, kung ano yung deductible dun sa estate, dapat naman kasama sa gross income niya. So, sales less cost of sales less expense plus yung income received from the estate. So, yung 250,000 dito na from the properties in the estate, this is not subject to income tax. Kaya yung income na dinistribute lang and or income earned lang ni estate. So, the taxable income is 180,000. And for the last question, income tax payable of B, wag lang natin kalimutan dito yung withholding tax na 15%. So, kung 0 yung sinagot nyo, okay lang naman. Kasi hindi ko nasama yung slash refund, income tax payable slash refund of B. But, syempre, kung nasa choices yan, piliin nyo yung best answer. Okay? Last question, A died on January 2, 2016, survived by 4 qualified dependent children. He left a net estate of 80 million, which is in the hands of an executor. In 2016, 17, and 18, the estate had identical gross receipts of 7 million, cost of sales of 4 million, and business expenses of 2.2 million. So, ang net income niyan ay 800,000. Determine the taxable net income of the estate in 2016, 17, and 18, assuming personal exemption of 50, additional exemption of 25,000 per qualified dependent, and 20,000 special deduction of an estate, all prior to 3. So, gusto ko lang i-present tong problem sa inyo because just in case, you know, I know na hindi na included yung train law, but what I want to emphasize here is especially yung sa 2016. So, pare-pareho siya ng net income, but during these years, iba-iba yung naging taxable income niya. Dapat, diba, 800,000 lang, and then nagkaroon tayo ng special deductions throughout the different years. So, for 2016, 800,000 lang yung income niya, pero maglalas tayo ng 50,000 personal exemption, tapos 100,000 additional exemptions kasi meron siyang 4 qualified dependent children. 25,000 times 4, kaya naging 650. So, bakit pa siya may personal exemption? It's because he died in 2016, kahit January pa yan, but for tax purposes, it's assumed that he died at the end of the year. So, there is still personal / additional exemption. So, actually, yun lang talaga yung gusto kong i-point out giving you this problem. Kaya binigay ko na rin yung mga amounts, yung correct, yung 50,000, 25, and 20. Because you don't really have to know that. But I want you to know na ganito yung treatment sa isang taxpayer. Pag namatay siya at the start of, during the year, it will be assumed na namatay siya at the end of the year. And then 2017, dahil patay na siya, meron na siyang special deduction of the estate. Yun na yung 20,000. Kaya naging 800 less 20,000 lang yung 2017. And then for 2018, there's no more special deduction because this is now under the train law. Okay? So, that's it, guys. I hope na may mga na-clear naman na questions sa inyo. Tapos, if you have any more questions, siguro mag-comment na lang kayo sa video na to. And, ayun lang. So, thank you for listening and God bless.